this COVID environment has been actually very unusual for all participants. Even observing the stock market. So I guess in terms of trying to find out the winners and losers, you think about how banks are operating. The major core driver of their earnings is their net interest margin, right? So compared to a year ago, their net interest margins are a lot lower than today than where they were 12 months ago. And there's no way the net interest margins can mean revert, and hence there is no way their earnings can mean revert to where they were, a year ago. And given that earnings pressure, that long-term earnings decline, and yes, you can have the earnings bump up currently associated with the reversal of the bad debts provision, but without earnings growing substantially, that share price, even though it has been rallying quite a lot over the last few months, cannot get too disconnected away from, CBA's earnings profile over the long term. So to put that into context, when I talk about NIM, let's say the ROE for CBA currently is around 10%, and it is Australia's best bank in terms of its return on capital.
Yep.
But a year ago, it was around 13%. We can't see how CBA can regain that 13% mantle, especially the fact that before the result, the share price was trading, just shy of its all-time high.
Yeah, absolutely. I mean, look, the squeeze on interest margins is certainly not just a CBA-specific issue. It is a sector-wide issue, isn't it? And I'm sure that the banks would like to see steeper curves and higher rates. So that makes me ask this question: when you take a look at CBA versus the other banks in Australia, how does it compare, and what would be your top pick?
Oh, good question. I guess in this environment, look, CBA has done exceptionally well. I think if you think about what may happen over the next few months, I suspect the market would probably prefer the laggard. CBA has been kicking goals so far, but I don't think the share price can rally much further. In terms of the laggard that could catch up, it would be Westpac. Between the big four banks, I would put Westpac as one to watch, where, look, it has been impacted the most by COVID. And if you think about a world where a lot of the COVID effects can be reversed, Westpac has the most potential to actually surprise on the upside. And by the way, like a year ago, a lot of the banks had, put provisions associated with house prices decreasing. Obviously, a year later, house prices are rising. And Westpac, in particular, out of all of them, has had the largest provisions against falling house prices. So that has still yet to play out.